All right, so a whole lot going on in the world right now. Let's begin, of course, with oil prices on a Thursday. Even with the suspension of tariffs across the globe, still had Brent crude at 65.08. West Texas, that's the North American grade. We're going to touch on this for a moment with our guest, 61.98. Nigeria's benchmark, $75. A lot of countries in the Middle East also impacted by this as well. Natural gas, $3.73. So we're going to begin there with respect to how oil refiners are reacting to lower costs, or rather with falling oil prices. U.S. oil refiners, they're saying they're going to refrain from substantial investments. This according to reporting from Reuters. We're also going to get into the U.S. markets and a whole lot more. Going to hop on now to Oklahoma City, joined by Sam Jurrens, who's the CEO of Even Heard. Sam, good morning to you. Thank you so much for being a part of the show. Before I get into the oil, though, the big rally that we saw yesterday in the U.S. markets, is it a relief rally? Is that the best way to describe what we saw after Trump paused those tariffs?
Yeah. Morning, Rodas. Good to see you. Yeah, yesterday was quite jarring, to say the least. I think a relief rally is a good way to put it. There at least was a catalyst of President Trump making that announcement. However, when you look specifically at what traded the most, it was really the mega cap. So you could argue, a lot of passive flows coming in yesterday as well. Companies like Apple, you mentioned, the exact opposite happened in trade terms with China, which is definitely affecting Apple the most, and their stock was up 15% yesterday. Then you have a stock like Tesla, which is probably the most insulated from these trade issues or trade wars, given their facility locations, and their stock was up 22%. So, the market didn't really give us any good information yesterday. You always look for clues and kind of insights to how the market, is interpreting some of these data points, and yesterday was a little bit more chaotic on the upside than I would say anything meaningfully gained from it.
So I was reading an article from, I think it was even Reuters or so, that pointed out that the NASDAQ had some of its best days during a crisis like Black Monday, the financial crisis, 2008, 2009, COVID. So what about the dead cat bounce phrase? Does that apply or not?
Yeah, we at least had a catalyst. If you look at what's been weighing on the markets in general, it's just uncertainty, right? Like the markets absolutely despise uncertainty because they don't know what's going to happen, especially in this situation. Even if you're, the most world-renowned trade expert, I don't think anyone knows for certain exactly how this is going to pan out. So you do see a lot of those, in massive declines. We had a 10% decline in the S&P 500 over 2 days, and yesterday it was up almost 10% back. So those kind of movements are normal in crises, not necessarily what I would say. This is almost more, hypothetical in a way, not actual direct impact yet. The market's just very uncertain and trying to digest exactly what's going to happen. So when you have a huge flush, like a 10% move lower, it's normal to see a bounce back just because sellers, aggressive sellers are already out of the way. But in yesterday's case, it was just an unusual price move on an announcement.
I want to get your take on I guess, the recession discussion now. Goldman had this, so funny. I mean, about 12:57 p.m. Eastern, they had the recession base case at 65 or so percent. And then about 1:57 or so, or 1:18 rather, Trump pauses the tariffs. And then about an hour later at 2:10 p.m., Goldman reverses their forecast and they're back to 45% recession odds in the U.S. from 65. What's your outlook? Where do we stand there?
So if that's not the definition of uncertainty, I don't know what is. I think their focus, I didn't read their specific report, but their focus is looking at the drag that, tariffs can have. If you look at especially an imminent tariff that, most companies, they can't navigate quick enough to avoid. You do have a potential economic drag from that in the short term, and as companies are able to adjust. And so I think that's really what they're looking at. But I know, from our previous conversations, we've also discussed the amount of government spending that's being cut. If those truly go through and happen, that alone will also have a drag on GDP. My personal opinion, that's positive for the long term, especially the type of cuts they're making. But you are potentially able to see a GDP drag on paper. It's just wondering, if that's going to really spin out to a true, economic recession versus more of a technical recession.
I want to pivot to oil. We kicked off with this Reuters report that U.S. oil refiners are pausing any substantial investments in crude processing. Now, that was, I guess, right before the tariffs were paused. Low oil prices, pretty good for U.S. citizens at the pump. But what about the oil and gas industry? I mean, if WTI keeps, falling, what happens there?
Yeah, for the U.S., it's kind of, you got two sides. You've got the consumer that benefits, and then you got the energy companies, which are a large part of the economy. U.S. being one of the largest oil producers in the world, so there's definitely economic impact from that. More than the tariffs, I would say, OPEC has also increased supply as well. So I don't know if OPEC is maybe looking at more economic strength than what kind of the headlines and other economists are looking at. But I would say, it has been surprising to see how far it's dropped. But it's a huge benefit in terms of inflation. If oil was at $150 a barrel, I think the world would be in a different position right now. We're kind of spoiled and blessed by low oil prices. It's just wondering, how much supply chain issues do we see from these trade negotiations of companies, delaying or pausing decisions as well. And I think the pandemic is probably a good example of that. In the most extreme case where you had, complete halting of businesses, that's where, oil dropped negative, which I don't think anyone even thought was theoretically possible. So in that case, you could see continued price pressures, especially if you see higher, production in the U.S. from the eventual announcement of, lower regulations. They did it on coal just recently. And so if you see that, it's potential to bring more supply, which is going to have, negative price pressures. It's just kind of a case by case basis on who benefits from that.
Sam, I want to get your thoughts on the Middle East. Not sure if you're interested in equities out there, but the U.S. does have a trade surplus with states like the UAE, Egypt, Qatar, Saudi Arabia. With oil prices where they are, I guess the fiscal impact on those states, would that give anyone pause to invest there?
Yeah, I can speak more to oil than necessarily the country specifically. I think it is a lot different dynamic, where you're talking about more of a, private type enterprise versus a publicly owned type enterprise, or government owned enterprise as well. The cost and the financials are kind of a little bit of a different animal with those, but I would say in general lower prices do affect that across the board. So there could be some economic strain if this kind of price decline continues. I think it's just up to the markets to see whether oil continues to move lower or if we stabilize and move higher with potential economic growth, which I would say is probably the less talked about. No one's really looking at what if we have more free trade? What if all of a sudden the globe is, better negotiations and trade and we see a big boom and, higher demand for fuel. So I think that's there's a possibility of that. I think it's just completely ignored right now. Everyone's kind of focused on the downside pressures.
Now, I still want to stick with oil, but now for the U.S. aviation sector, and I guess jet fuel makes up, a pretty large portion of costs for the airlines. And I mean, I guess this rally was across the board because we saw a real big pop in a number of these stocks. So yeah, Delta was up 23%, United Airlines 26%, Alaska 22%, American Airlines 22%, Southwest. Have airline stocks ever been appealing to you? Because year to date, all those stocks are still down. What's your view on the aviation sector?
Yeah, they've been pretty volatile. I mean, honestly, over the last 12 months, even, our systems, as we've discussed, are a little bit more relative momentum based. United's really the only one on there. SkyWest is another one. It's a smaller operator. But On the economic perspective, if the economy does go into recession, airlines usually take a hit during those type of periods. They also have a lot of, trade war specific risk as well. Delta made an announcement saying they weren't going to pay the 20% tariff for their Airbus order. So those type of events are going to cause, extreme disruptions in those, specific niches. And so I think you have a lot of, a lot of risk within that space that I personally wouldn't prefer at these levels right now. I would be more negative on them for right now, even with oil prices lower, which they benefit from. I just think it's too much price pressure at the moment.
Gotcha. So I guess, Sam, putting all this together, how are you guys over at Even Heard going to be trading going forward? Is it a 90-day basis or a full year? How do you see things in the U.S. economy?
Day to day right now is just, the price swings are just, mind blowing. And this has been since the peak in February. Watching some of these stocks move plus or minus 50%, month to month. Extreme volatility before the trade war discussions even came about. And I think they will just continue. We're going to see a lot of price swings. Markets aren't acting necessarily rational. My personal strategy, especially the one we manage, is a long short related. And in that case, we're able to short securities that are declining, as well as go long stocks that we view as more stable areas, really looking like, utility related companies at the moment, as well. A lot of defensive related industries, and then financials are still elevated and still in there. We haven't seen, a huge decline in those, other than a few niche pockets as well. So I think there's still a lot of opportunity. It all comes down to, the time horizon, like you were saying. If you're looking out a month or, even 6 months, the uncertainty is astronomical. But if we look out 5 to 10 years, especially for longer term investors, it's, you're getting more and more, positives by seeing further price declines to be able to, continue to add to investments at that point.
Sam Jurrens, CEO, Even Heard, always a pleasure. Thank you so much for getting up early to talk to us all the way from Oklahoma City. We appreciate your time as always. Thanks.